Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is sector trades for August 9th, 2024. With the stock market potentially putting in a short term bottom here, it's a good time to look at some sector trades and play these tradable, at least a tradable bounce potentially in the stock market, if not more, from a sector perspective. And trading these ETFs takes out individual stock risk, but allows you to participate in the sector because you have an ETF focused on the right stocks for that specific sector. So if you want to have a little bit less individual stock risk, but you still want to participate, sector ETFs are a great way to do that. And as we discussed in the newsletter, artificial intelligence, cybersecurity, and fintech all had multiple stage 2 breakouts this week. So these look like they're sectors that are under accumulation potentially coming out of the stock market correction. So that's where you want to be in terms of picking the right sectors that might outperform are the ones that have multiple stocks breaking out after a correction. So BOTS, the artificial intelligence ETF, is the first one. And as I discussed in the newsletter, a logical place to put a stop now would be underneath the lows from last week. And a logical place to do some buying would be on any pullback next week. So if we get a pullback next week, you can use the low from last week as the stop, and then looking for more upside over the next few weeks in a potential new leading sector. And BOTS on the daily, you can see it got back into the gap from before Monday last week. There was a gap down. Price action got into that gap by the end of the week. I could see there being a little bit of a pullback next week, but as long as these lows are defended, this thing might resume higher then, and then you'd have a nice tight stop to play upside here in this sector ETF. Cybersecurity actually has held up even better. It's already back close to resistance now after the bounce. It's back above the 10-week moving average. And then if we look at the daily, you could put a stop on this one actually at the recent lows as well, and then look to buy a pullback next week with resumption higher after the pullback. Or if you wanted a looser stop, you could put a stop at Monday's low. But this one's set up pretty well now with a failed breakdown pattern. And then finally, ARKF, another one, again, reversing off the lows on volume. This one is below the resistant or the former support. But if it does take more volume next week, it could just blow back through that resistance. On the daily, you can see how it rallied back up to the resistance. So it's probably going to pull back. It rallied back into that gap as well. Likely going to pull back next week. You can use this Monday lows as the stop, and then look for lighter volume on the pullback. Look for support to hold, and then finally resumption of the rally. So same pattern in all three ETFs. Again, software seems to be where the market's pivoting to, and you've got multiple areas that have led in the past that could be resuming leadership. And I would watch to see how these act next week. If they hold up well, if more volume comes into them, that confirms a reversal, which means the stock market is likely headed higher for the next few weeks.